It's 8 GMT. European finance ministers again under the spotlight as Ireland braces for its key budget vote, and a likely rate rise in China adds to market jitters. The dollar falling to a 3-week low against the yen, pulling Japanese stocks lower in its wake. The official China Securities Journal reporting the central bank could raise rates again this weekend. The euro, meanwhile, holding above 133 against the dollar, despite disappointment that Eurozone finance ministers decided not to take any new measures to tackle contagion from the debt crisis at a meeting last night. Another test today with the Irish budget vote, the budget expected to pass and open the way for Ireland to tap EU and IMF emergency loans. But the wider underlying problems, of course, remain. All 27 European finance ministers due to meet in Brussels this morning. So what's likely to emerge, if anything, out and out of Brussels? And our economics editor, Nick Edwards. Nick, I know people have been arriving. Any comments out of the arrival so far?
Well, Didier Reynders has been one of the first to arrive. He holds the rotating presidency of this meeting because, of course, Brussels is the president of the EU at the moment. He's basically said, well, we're going to be talking more about the stability facility and likely the size of it over coming weeks. Today's meeting is about smoothing over the rough edges that are left over the permanent crisis mechanism that was agreed to help Ireland. But essentially now the finance ministers are all on the same page. We don't need any more money. We don't want any more money right now. That was the agreement of Eurogroup yesterday. That's what ECOFIN's going to hear and essentially ratify today. And market attention is likely to shift towards ECB and its bond purchase programme after these meetings are over.
How high are expectations, actually, that something will come out of this?
Well, out of this meeting, not a whole hell of a lot new. I mean, if the Eurogroup yesterday, which is where the crisis, if you like, remains to be resolved, and if there was going to be new money, it would come from there. Well, they didn't want to increase the size of the facility as urged by the IMF. The e-bond idea seems dead in the water, at least for now. Essentially, it's looking at where the market moves to next, and the market is probably going to start shifting its attention next, at least according to the people that I'm talking to, towards the ECB, what the ECB is doing in its programme, how many more bonds it can buy. OK, thanks a lot, Nick. Plenty more from Nick later on in the day. In other news, President Barack Obama has announced a compromise deal to extend all Bush-era tax cuts for 2 years. The move gives ground to Republicans who scored big gains in last month's congressional elections. The agreement also extends unemployment benefits for 13 months. Obama says it is an important step forward.
So sympathetic as I am to those who prefer a fight over compromise, as much as the political wisdom may dictate fighting over solving problems, it would be the wrong thing to do. The American people didn't send us here to wage symbolic battles or win symbolic victories.
U.S. government has sold off its remaining shares in Citigroup for $4.35 each, just below their market price. The sale leaves the taxpayer with a profit of $12 billion. Here in Europe, the world's number 3 food retailer Tesco announcing a 7% increase in third-quarter sales. Strong growth in Asia offsetting a weak performance in its home British market. A strong start for Tesco this morning in the UK. Global miner Xstrata is to spend $23 billion on new mines by 2016 as it pushes forward with organic growth rather than takeovers. Quick check at the European stocks. The benchmark Euro First 300 right now up about 0.4%, 1109 and a half. Sentiment lifted by Obama's tax cuts. And one other stock to watch. The Daily Telegraph says BP is ready to sell off $1 billion worth of its North Sea assets. So do watch BP later on today. Coming up later on Insider, we'll look at Thomson Reuters' exclusive FX trade matching data to see where cable is headed in the rest of this year. That's at 8:45 GMT. And stick with us throughout the day for the latest developments out of Dublin and, of course, Brussels. I'm Axel Trovel. This is Reuters.